Hello everybody, welcome to this particular session where we will be talking about the most important, most relevant 50 questions for the IE and IFS examination. This particular session will serve as a benchmark for all of you who are preparing well for the examination and they want to see that how the questions have evolved over a period of time in the previous exam cycles. So not only we will be talking about the questions, we will also discuss that whether we can hit alike questions in the actual exam as well. Okay, so without wasting any time, let's get started. I have only one recommendation, one expectation from all of you, that you will share this session as much as possible and you will get engaged in the replies as well. Whenever I say that this particular question we have to solve, you must give me the reply as soon as possible and keep one particular time limit in your mind for these questions, because mostly the questions are of 0.5 marker or 1 marker only. Fine. So when we talk about the first question, which among the following is not a method of deficit financing in India? And such question has been repeatedly asked in the exam. When you talk about the deficit financing concept, where have you read? That must be in your mind. Okay, deficit financing we have studied in the chapter where we have talked about the economic planning. Fine. In the economic planning, the last topic is of deficit financing. After that, the deficit concept as such we have discussed in the budget also. So when we talk about deficit financing in India, we do it via borrowing from public and foreign governments or not. And whenever we talk about the deficit financing, we say that the government can borrow money from the public as well as the foreign governments. But when I say that the borrowing from RBI, that also can be done using the for the deficit financing. Withdrawing cash balances withheld by the RBI, yeah, yes, that also you can do, but not direct borrowing is allowed from the private sector altogether. Leave aside this deficit financing concept. Government never borrows directly from the private sector. So not a method was asked. That is why D will be the correct answer. Okay, if you know that these three are there, then definitely you can directly eliminate the three options and you can directly say that D is the correct answer. Okay. Next, some explanation is there for all of you. When we talk about the financial resources for economic plans, the first and the foremost is DBS, the domestic budgetary sources. And in domestic budgetary sources, you have the taxation system, the taxes as the most relevant concept, the most relevant channel via which the government finances the economic plans. Then we have deficit financing. In deficit financing, there are three types: borrowing from public and foreign governments, withdrawing cash balances withheld with RBI. Also, direct borrowing is also allowed. Next, we have the last and the often used in you can say the era of post-independence, that is foreign assistance. Maximum assistance was given by the World Bank Group via IBRD and IDA. Okay, then we have a question based on the MSME definition. See, in this particular session, you will find the questions from all the important aspects, from all the important chapters, all the important subtopics. And these 50 questions have been designed so that we can have the maximum weightage dedicated for the module D. Then we have the weightage assigned, second maximum weightage is assigned to module B, then module C and then module A. Like that we have tried to inculcate all the important concepts within one particular session, because the exam is approaching and you must have that final push. So which among the following is correct? Ratio of minimum investment in plant and machinery or equipment for small enterprises to medium enterprises. So when we talk about the minimum investment in case of small enterprise and medium enterprise, as you know that MSME has two definition. You can say that a particular enterprise you can define as medium, small or micro enterprise based on the investment limit as well as the turnover limit. Here, if you know for the small enterprise and medium enterprise the investment limit, then directly you can answer this particular question. So what will be the right answer as per the latest MSME definition? So the right answer will be 1:5, that is option B. Okay, 1:5 will be the right answer. How we have arrived here? See, this is the revised limit with effect from 1st April 2025, which you have to remember. And when we talk about the investment limit of your small and medium enterprise, it is 25 and medium enterprise is 125 CR. So simply you have to take the ratio 25 divided by 125, you will get what? 1:5, or for that matter you can say that it is 1:5. That was the right answer. Okay, because this particular question has been asked time and again, this table becomes automatically very, very important. Next we have the question based on priority sector lending. So the targets with respect to small and marginal farmers of foreign banks with more than 20 branches in India is what? Whether it is 18%, 10, 7.5 or 12%. Always remember, the agricultural priority sector lending norms, they apply to the domestic commercial banks, along with that foreign banks with more than 20 branches, then RRBs, as well as the small finance banks. Fine. So when we talk about the foreign banks with less than 20 branches, it's not applicable to them. So the right answer for this question will be 18%. The overall norm is the priority sector with the more than, for small and marginal farmers, is 10%. That is option B. Fine. Small and marginal farmers is 10%. When we talk about the overall is what? 18% for agriculture. Then 14% of this 18% is for the NCF, the non-corporate farmers, and the 10% of this 14% is dedicated to the small and marginal farmers. Okay, so these three limits for the agricultural sector you must remember. Fine, this is the table, this is the master guideline, which is very, very important for our examination. Again, I am saying that questions have been asked and we are expecting one question out of this particular table. So do not skip such important things, such important data points, because time and again IIBF has made questions from this particular table. Next we have the Committee on Weak Banks 1998 was formed under the chairmanship of whom? R.H. Khan, S.N. Verma, A.K. Khandelwal, or none of the above. So weak banks, directly we can say that it was formed under the chairmanship of S.N. Verma, and that is the option B. Apart from that, you must remember Chakravarti Committee for Monetary Policy 1985, Narasimham Committee 191, then Padmanabhan Committee to review the bank supervision, fine, RBS in 1996, Narasimham Committee 2 on the review of banking sector reforms which were there implemented by the Narasimham Committee 1. Then Verma Committee on Weak Banks and R.H. Khan Committee on harmonization of role of FIs and banks. And these years which are mentioned in the bracket, they are also very, very important. Fine, you cannot skip the year, because last year, last exam cycle in May 2025 only, year was also asked. Then we have which among the following is not a correct match of the CAMELS initiative implemented as per the recommendations of Narasimham Committee 2. So always remember, these abbreviations are very, very important. Like here we have CAMELS, then we have SCOMET policy, then in module D also we have some of the abbreviations like speed plus star. All these schemes are very, very important in module C. Fine. So the correct answer will be option C, because when we talk about M, it stands for management, not money. Okay, so here you can see that C stands for capital adequacy, A for asset quality, M for management, E for earnings, and L for liquidity, and S stands for, in CAMELS, S stands for sensitivity to market risk. Now, similar question, similar pattern of question is followed here also for the FTP 2023. When we talk about the SCOMET policy, which forms an integral part of the Foreign Trade Policy 2023, what does O stands for in SCOMET policy? Whether it is organization, outward remittance, ombudsman, or organism. So always remember, in SCOMET, O stands for organisms, and the correct answer is option D. Apart from that, S stands for special, C for chemicals, O for organisms, M is for materials, E for equipment, and T is for technologies. Then we have under FTP 2023, the government aims to increase India's overall exports to what number? Here you must remember that in case the government has established a particular number, that automatically becomes important. And in FTP 2023, it is 2 trillion. But what is the target year? Right? 2 trillion you can eliminate B and D. But what about the target year, 2035 or 2030? The right answer is 2030. So C is the right answer. Then a parent corporation establishes a subsidiary in destination country. It builds operations from scratch. Hyundai India, Pepsi India, they are the examples of such FDIs. Which of the following type of FDIs is described above? So when we talk about starting the business from scratch, establishing a subsidiary in the country where the FDI is incoming, then you will say that it is a type of greenfield project or greenfield FDI. Brownfield is in the investment in the already established firm. You are having certain hold in the shares or the stocks of that particular company. Joint venture, you are joining hands with the parent company, and you are sharing the profits, you are sharing the innovative ideas in the country as well. So A will be the right answer for this question. Then we have automatic route, again very important. Whenever we talk about this module, that is module A, you will find n number of questions from the last 2 or 3 chapters, unit number 8, 9 and 10, most important. So according to the information provided below, which of the following is true regarding the automatic route for FDI in India? So always remember, whenever the question is for the automatic route, you need not to have any prior approval from either RBI or for that matter Government of India. And you can match it with the following options. FDI through the automatic route requires prior approval? No. Indian firm requires receiving the FDI through automatic route are exempt from reporting requirements. Report you have to submit to the RBI. Investors under the automatic route must follow a 2-stage reporting process to the RBI. That is the right answer. Okay, C is correct. Now, why we have chosen these questions? We have handpicked these questions because these are the most repeated questions in the previous exam cycle of IE and IFS, and we want our students to have a look that how the questions have evolved over a period of time. Most of you must have given the exam previously also in May 2025, and you must be searching for such kind of sessions. This is the session which will tell you that where you need to focus in the remaining 5 days. Then we have which among the following are the functions of MIGA, that is Multilateral Investment Guarantee Agency. So first one is encouraging the FDI into developing countries, protecting investors against non-commercial and political risk. Then we talk about the advising government on how to attract investment. So MIGA has 2 objectives. One, to promote the FDI in developing country. Second, to protect the foreign investor in case of the political risk or the geopolitical instability. So 1, 2 and 3, these are right. When you talk about sanctioning long-term infra loan, that is not at all the function of MIGA. It is for the IBRD and your IDA. Okay, these 2 organizations under the World Bank Group, they give the long-term infra loan. So the right answer will be what? 1, 2, 3, option A. Okay, IBRD, IDA for long-term infra loans, IFC for the private sector development, MIGA for foreign investment development in the developing country. ICSID is just a, you can say it acts as an arbitrator, and when you talk about arbitrator, it tries to resolve the disputes here. And one more thing very important, that when you talk about these 5 organizations clubbed together, we know them as World Bank Group, and India is a member of IBRD, IDA, IFC and MIGA, but not a member of ICSID. That you have to remember. Next we have a question based on the Panchamrit commitments. So India has made 5 Panchamrit commitments to combat the climate change. Which of the following is not one of them? So this type of question has already been asked, but just a part of that is asked. We are expecting that more elaborate question will be there in the final exam. So when we talk about this particular question, Panchamrit commitments, you have to tell me which of the following is not one of the Panchamrit commitment. So achieving the target of net zero emission by the year 2060. 2070. Fine. Here it is written 2040. So this is a wrong statement which we have to tell via this particular question. Okay, so A will be the right answer. Fine. So see, in this session you might feel that the speed is too high, or for that matter the explanation is not that elaborate. There is a reason why, because we just want to spend 50 minutes. We want to take your 50 minutes only and give you the maximum important stuff which is required for your IFS examination. Okay, meanwhile, once you are done with this session, you can again revisit the session. The PDF will be uploaded in the virtual library. From there you can directly access the final PDF and you can go with the explanation as well. So climate action, Panchamrit commitments, there are 5 commitments starting from net zero emission by 2070, and the remaining 4 commitments, their target year is 2030 only. Then we have dash is aligned with the 2030 agenda for sustainable development via SDG 4. So SDG 4 talks about the quality education. That is why the right answer will be option C, National Education Policy 2020. Okay, quality education is SDG 4. Then we have the questions from module B, economics as the study of wealth, including man and means to achieve scarce wants, are the 3 major definitions of economics. Who were the proponent of these definitions respectively? So there are 3 important definitions of economics, starting off with the wealth definition, which was given by Adam Smith. Wealth including man, Alfred Marshall. Means to achieve scarce resources. For the economic policy, we have Lionel Robbins. So the right answer will be Adam Smith, Alfred Marshall and Lionel Robbins. C is the right answer here. And this is how you have to attempt in the actual exam also. That should be your speed. Okay, if you have already read these definitions, then this is the time, the bare minimum time which you should take in such questions, because these are 2 direct questions. Then we have Chitra, a rising star in Mumbai's elite social circles, recently acquired a limited edition handbag from a renowned European designer. The bag, priced at 50 lakh, generated considerable attention among her peers. Just weeks later, the designer announced price increase to 75 lakh. So already you have a luxury bag. Its price has been risen to 75 lakh, not 70 lakh, to 75 lakh. So from 50 lakh, it has moved to 75 lakh. So 25 lakh, it has been increased. Surprisingly, Chitra immediately purchased a second bag. This type of spending, which contravenes law of demand, can be studied using which of the following economists' theory? So we have 2 theories, exception of law of demand. One is by Robert Giffen, and the another one is by the economist, that is Thorstein Veblen. And the luxury items, the conspicuous consumption, is being talked about by Thorstein Veblen. That's why we will be saying that A is the right answer. For the inferior goods, you have Giffen goods as the right answer. So for this question, luxury items, option A is the correct one. Fine. Next we have quantity demanded tends to fall as the price rises. So demand falls when the price rises for 2 reasons. There are 2 reasons, only 2 reasons are there. There is no third reason. Even if you can think of the third reason, it will fall under these 2 effects only, whatever effect you will be answering. Which among the following 2 are the reasons for the same? So always remember, it is the substitution. You have the alternate for the particular commodity. That is why you are not shifting your that is why you are shifting the demand and you are not pushing for the supply. And secondly is your income effect. You want to have a minimal level of savings from your income. So the right answer for this question will be substitution and income effect. Option A is the correct one. Next we have one question based on the measure of money supply. So RBI provides the following data for a specific date in crores of INR. When you talk about the data, it is provided for currency with public, it is 45 lakh crore, demand deposit with bank 20 lakh crore, 70 lakh crore is the time deposit with the banks, other deposits with RBI 60,000 crore, post office savings deposit 5 lakh crore, post office total deposits is 12 lakh crore. Fine. So when we talk about all these, you have to calculate what? You need to tell me what is M1, M2, M3 and M4. Always remember, whenever there is question of M1, you should know the formula. Rest you can directly decipher from M1 itself. So M1 is what? Currency with public plus demand deposit plus other deposits with the RBI. So currency with public plus demand deposit plus the other deposits with RBI. M2 will be equal to what? You are just adding in M1 the post office's savings deposits. M3 you are adding time deposit in the M1, and when we talk about M4, it is nothing but M3 plus the overall deposits in the post office. Okay, when you know these formulas, you can directly answer the question. And mind it, when we talk about IFS, always use calculator because it is allowed in the exam. Fine, do not waste your time in such bulky calculation. Just try to solve this question from the calculator. The right answer for this question will be what? It will be option A, that is 65 lakh 60,000 will be crore will be your M1, M2 will be 70 lakh 60,000 crore, M3 1 crore 35 lakh 60,000 crores, and M4 will be 1 crore 47 lakh 60,000 crores. Okay, here you can see the chart is also there, so in PDF you can see for yourself, learn for yourself that how the formulas are there. Then we have a question based on CRR, and when we talk about CRR, how that particular reserve ratio will determine the actual money supply in the economy. So a commercial bank receives a new deposit of rupees 10,000. So new deposit, the fresh deposit will be what? M0, the reserve money, that is 10,000. And when we talk about the RBI, it has set a reserve ratio CRR at 5%. So the reserve ratio is what? 5%. You have to calculate the total amount of money that can be potentially created by the banking system by the initial deposit. So M3 is what? That is the question. And when we talk about the money multiplier, there are two formulas. Money multiplier is equal to M3 by M0, and the another formula is reciprocal of the CRR. So M3 by M0 is equal to 1 by the reserve ratio. You simply have to put the values here and you will find M3. Okay, M3 is equal to what? M3 will be equal to M0 divided by RR, that is reserve ratio. Now this reserve ratio is in percentage. You have to convert it to the numbers, fine, only in the digits. Percentage sign you will remove it, and this will be what? M0 is your 10,000, fine, 10,000 divided by 5 divided by 100. The right answer for this question will be what? This is gone, 1 by 20, this will go up, and the correct answer will be option A, that is rupees 2 lakh. Fine, here is the explanation. So these formulas are small, but again I'm saying, do not forget to solve via a calculator. Do not waste a single second on solving the calculation. Fine. Next we have, if the price index during May 2024 is 193.40 and it was 186.20 during May 2023, what is the inflation rate? So inflation rate, how you calculate it? The present year minus the previous year divided by the previous year index, fine, multiply by 100. So this will be what? 193.40 minus 186.20 divided by 186.20. 193.40 minus 186.20 multiplied by 100. That will give you the inflation rate. Fine. So simple calculation, but again use calculator, that is the ask. B is the right answer, 3.86%. Next we have, what is true, which of the following statements is true regarding the CPI, Consumer Price Index. So whether it is released annually by NSO? No, monthly. Core inflation includes the effect of volatile food and energy? No, it excludes the volatile effects. Current CPI use the base year 2012 with base value of 100. That is right. CPI is a measure at wholesale? No, it is for the retail level. So C is the correct answer here. Then we have in the ISLM framework, if the Indian government increases its spending, it means we are seeing the fiscal expansion. Fine, we are talking about fiscal expansion on infrastructure projects. Which of the following is most likely to occur? So always remember, whenever there is fiscal expansion, two effects will be there. One, your particular graph will move towards right because the economy is expanding. Along with that, which graph will move, IS or LM? In case of fiscal policy, fiscal contraction or fiscal expansion, you will find IS curve, it will be shifting, LM will shift in the monetary policy. So what will the right answer here? The IS curve will shift to right, leading to higher rate of interest and higher output. Fine, it will shift towards right, and which curve? The IS curve. Here you can see the fiscal expansion on which the question is framed. Whenever we have the level of income increasing thanks to the government of India's push in the infrastructure projects, or for that matter lowering the tax rates, then you will find level of income rising. So the curve will, the IS curve will shift towards right, and rate of interest will move up. So rate of interest will increase and level of income has already increased. Then we have dash are the two primary assets preferred by the consumers under the liquidity theory of interest provided by J.M. Keynes. So J.M. Keynes has provided us with a theory that you will be having some of the assets based on which your entire economy will determine the rate of interest. And these two assets, the two asset model of an economy, comprises of cash and bond. So C is the right answer. Which of the following is not a characteristic of business cycle? So it is the business cycle is pervasive in nature. It penetrates. Fine, it is not having a singular effect. It multiplies. It is having multiplier effect across the entire sector, not only in one segment but across the sectors of economy. So it is pervasive in nature, and here it is written non-pervasive. So A will be the right answer because you have to select not a characteristic. Then we have which of the following is not a direct component used in calculation of MCLR. So always remember, MCLR, external benchmark rate, and internal benchmark rate. There are two benchmark rates, internal being MCLR using the marginal cost of fund of a respective bank. EBLR is the external benchmark rate. In MCLR, we have marginal cost of fund, negative carry on CRR, operating cost, but external benchmark rate is not the right component. So not a direct component is option D. Then we have a formula based question. Such questions have always been asked by IIBF. You cannot ignore such questions. That is why we say, even if you are fearful from the calculation part, still try to remember the formula because they will fetch you 1 mark. When directly no calculation is asked, simple formula is asked here. Which of the following is the formula for GVA at basic price? So at basic price, how you will calculate the basic price? In the factor cost, you have to include the taxes and exclude the subsidies. Simple. So the right answer will be option B. Factor cost plus taxes minus subsidies. And when we talk about the market price, fine, in market price what you will be doing, indirect taxes you will add and you will subtract the subsidies. Which of the following form a part of capital expenditure in the Union Budget of India? Now this type of question, if you have good cramming power, then you can directly answer, else you can leave it for the end also. So securities against small savings, state provident fund, internal debt and public account, or none of the above. So out of these three, no component is a part of your capital expenditure. Why? Because they are under the capital receipt. Fine. Government security, T-bill, the market borrowings, security against small savings, state provident funds, internal debt and public account, all of them are under the capital receipt. Then we have which among the following do not fall under the provision of BRA 1949. So we have here 4 options in front of us. When we talk about the Banking Regulation Act, it is not covering your SCARBs, that is option D. Fine. State Cooperative Agriculture and Rural Development Banks. SCARBs along with the PACs, they are not covered under the Banking Regulation Act. Such exceptions you must remember. Then we have which among the following is the correct sequence established of establishment of DFIs in India. See, in module C you will find 2 or 3 questions based on chronology, and whenever we talk about chronology, then DFIs chapter has 9 or 10 institutions for which you must know the establishment year. Here the first institute to be established will be IFSC. Fine. From IFSC you can say that 3 will be the first one in chronological order. After that, do we have SIDBI, or for that matter we have IDBI? Always remember, SIDBI is just you can say an organization from IDBI. So IDBI will be the first one to be there. So B is the right answer. SIDBI, then IDBI, then EXIM, and lastly IFSC, then we have IDBI, then we have EXIM, and lastly we will be having SIDBI. Okay. So like that you must try to remember also whenever you are studying the DFIs chapter. The regulatory minimum NOF, net owned fund, for NBFC, ICC, MFI factors shall be increased to dash as per the scale based regulation of RBI. So always remember the answer will be option A, that is 10 crore. This question can also be asked because it was in news back in March also. In May also one important notification was released by the RBI. So directly it becomes important. So here you can see all the 3 types of NBFCs. By March 31st, 2027, the limit, the NOF must be 10 crore. Next we have, as per which section of Banking Regulation Act 1949 RBI gives license to the banks. So RBI is providing licenses to the banks, that everybody knows, but under which section? 20, 21, 22 or 24? Direct question, it will be section 22. So such type of questions, they are low hanging fruits. You should not miss such questions in the actual exam also. How much was the minimum deposit of banks that were nationalized in 1969? So minimum deposit, this question has been asked in May 2025 also. 2 questions in different shifts, one for the first phase of nationalization, another for the second phase of nationalization. So for the first phase of nationalization, the minimum deposit of banks was 50 crore. Then we have, which among the following committees has recommended the establishment of universal banks? So universal banks, earlier it was not you can say in trend in Indian banking system, but of late we have seen that many banks are under this category, most of the banks in fact. Fine. So universal banks, the idea came from which committee? Narasimhan Committee 2, not 1. Do not get confused. It was Narasimhan Committee 2 which gave the idea of universalization of various services in banks. Then we have the Hoth Committee and Sodhani Committee. Both were for the India's financial sector reforms and capital account liberalization. See, liberalization was there in the LPG reforms, but when we talk about the financial liberalization, it was still not there. So whenever you have the Hoth Committee, Sodhani Committee, they are for these 2 purposes. Next we have LIC was established in which among the following phases of financial reforms in India? So broadly speaking, there are 4 phases of financial reforms in our country, and LIC was formed when? It was formed in second phase, and the second phase talks about 1947 to 1991. In between we have seen LIC here. Okay, so the 4 phases: pre-independence prior to 1947 to 91, post-independence, post-liberalization 91 to 2010. When I talk about the post-global financial crisis, 2010 till present. And there were talks that we will be reshuffling this, but till now for our exam, these will be the 4 phases. The paid up capital for establishing scheduled banks in India must be at least what? 5 lakh, 10 lakh, 5 crore or 10 crore. So always remember, paid up capital will be your rupees 5 lakh only, not 5 crore. Do not get confused here as well. Which among the following statement is incorrect with respect to the National Bank for Financing Infrastructure and Development, that is NABFID? Basically you can say relatively new organization, and question can be asked. Incorrect, you have to tell me. NABFID has only developmental objects? No, it is for profit maximization also. Fine. So outrightly you can tick A and move to the next question. But additionally you can also see that NABFID does not take deposit from the general public. That is correct. Government initially holds 100% of the shares in the bank, which may subsequently to be reduced by to 26%, right? Only 26% will be left. That is also right. The NABFID was set up as a corporate body with an authorized share capital of rupees 1 lakh crore. Absolutely correct. This limit can also be asked. So the right answer, the incorrect statement will be option A. Then we have which among the following is the provision mentioned in the section 24 of Banking Regulation Act 1949. So in BRA, we have section 24 dedicated for which of the following. So always remember it will be SLR, option B. And when I talk about section 42 of RBI Act, it will be CRR. CRR is maintained with the RBI from the side of banks. SLR is maintained by the banks within the bank, and they earn interest also. Next we have the NAV of equity mutual funds and index or debt mutual funds. They are required to be rounded off to how many decimal places respectively. So always remember, NAV is the most important topic in the entire mutual fund chapter. Fine. Even if you have not read this chapter, although I always suggest that in the last week you should not read anything, you must go through this. Fine. This chapter is the most important one. So the net asset value of equity mutual funds and index or debt mutual funds are required to be rounded off two decimal places, 4 decimal places, or what? The right answer will be 4 decimal places in case of equity mutual funds and 2 decimal places in case of debt or index mutual funds. Okay. Then we have one question based on, I think it is in the, yes, indemnity, principle of indemnity insurance only. Miss Priya owns a boutique that she established 2 years ago with an initial investment of 20 lakh. So initial investment is what? 20 lakh. She purchased standard fire insurance policy with sum insured 15 lakh. Recently fire damaged her boutique, resulting in an actual loss assessed at 18 lakh. So 18 lakh is the actual loss. According to the principle of indemnity, the maximum amount of compensation Miss Priya can expect from the insurance company is what? So maximum amount you have to tell me. It is simply, we will be calculating, it is not mentioned in these options. D will be the right answer. How you will calculate? So actual loss 18 lakh, sum insured 15. You simply have to put it in the formula of principle of indemnity. That is sum insured divided by the value of insured asset. So the sum insured was 15 lakh here. And when we talk about the value of insured asset, the asset's value was 20 lakh because Priya purchased the boutique for 20 lakh. Multiply by the actual loss, that is 18. 13.50 will be the right answer. So such simple questions are also asked. Do not get worried when you see such questions in the exam. They are highly doable. Next we have which type of real estate investment trust REIT is specifically required to invest a minimum of 24% of its assets in commercial properties like shopping malls. So real estate investment trust, along with that the ITs, they are also very, very important, and they have been in news for the past 2 or 3 months. Direct question can be asked from this particular chapter, which is the last chapter of module D, or for that matter our entire syllabus, right? So in case of which of the following you will be having minimum 24% of asset in the commercial properties, it will be your retail REITs. Fine. By logic also you can say that the commercial purposes, the shopping malls, it is retail shop only, na? C is the right answer. Which among the following cases the insurance ombudsman cannot take up the case? So insurance ombudsman, like the RBI OS scheme, has some stipulations. When I talk about the complainant has made a representation to the concerned insurance company and insurer has accepted. If they have accepted, then why they will be allowing it to go to the ombudsman? The complaint is made later than 1 year, again you cannot go. The same complaint is pending in a court. If already somewhere, whether in the court or for that matter with the higher authorities it is pending, you cannot just go to the insurance ombudsman. So the right answer will be option D. In all these 3 cases, you cannot visit the insurance ombudsman. Next we have the investors in REIT have a tax rate of dash for the interest income to non-residential unit holders. So the right answer, tax rate for the non-residential unit holders in case of REITs will be your 5%. 5% will be the right answer, option B. Then we have the applicant to become a tri-party agent should have minimum paid up capital share of How much? It is option C, 25 crore. So such small questions are frequently asked from module D, and that makes it most important module in the entire IFS. Which among the following statements is incorrect with respect to term money market? So when we talk about the term money market, you must remember only two things. One, whether you can lend the funds in a specific time period, what is that particular time period, and whether it is on collateralized basis or uncollateralized basis. Based on that, you can directly state that the incorrect statement is this: term money refers to borrowing or lending for the time period exceeding 14 days up to 1 year on uncollateralized basis. Fine. A is the incorrect statement. Whenever we talk about the overall call, notice or term money market, you will find that various days are there. Like here you can see that the notice money, it is 2 days to 14 days, and when we talk about call money, it is a time period of 1 day only, and the last one, term money, it refers to the borrowing or lending for a time period exceeding 14 days up to 1 year. Fine. All these are highly important. The three are most important one. The definitions basically are the most important. Then we have import factor's role in international factoring is typically contingent upon a specific event related to buyer's payment. When will the particular party chip in if a you can say link in the entire factoring system has lost? So which factoring system triggers the import factor's involvement? Only upon buyer default. If the buyer defaults, under which factor system you will have the role of your import factor? It will be under the single factor system. Always remember, when the import factor will be there, here you can see, in case buyer does not pay in 90 days, import factor pays to the export factor. Fine. So always remember these charts, very important. If you have not revised them, do revise them via the lectures which we have conducted. What would be the correct nomenclature of the central government security issued in March 2025 for 15 years with coupon rate of 6.5% per annum? Directly this question was asked in May 2025 also. So the nomenclature will be what? Option B. That is, the coupon rate will be starting the entire nomenclature. Then we have the Government of India's name, that is GOI, and then maturity year. Fine. 15 years from 2025. 2025 plus 15 will be 2040. Then credit ratings are broadly classified into three main categories that indicate the level of creditworthiness. That we know. Fine. That everybody knows. Which of the following options correctly lists these three classified grades? So there are three classified grades, and when we talk about the correct answer, it will be option A, that is high investment, and speculative grades. Simple questions, but again, if you have read them, then only you will find them easy to answer in the actual exam. So presently we have 7 CRAs, CRISIL, and then we have the India Rating and Research Private Limited, ICRA, CARE, Brickwork Ratings, then Informix and Acute Ratings as well. So these 7 are highly important. Apart from that, you should also know that the risk is classified into 14 or 15 categories. Signs are also assigned, and you can say the rating agencies, they use various symbols, AAA, AA, BBB, B, C, D, to convey the rating to the investor. Fine. Next we have, which among the following is not stated as an objective of AMFI, Association of Mutual Funds in India. So AMFI basically, it is not having a direct hold over the mutual fund. It is not the regulator of secondary market. It only talks about the mutual fund aspect. Fine. So the right answer for this question will be to act as the direct regulatory. No, direct regulatory authority will be SEBI only. Otherwise, it will promote the best business practices. It will interact with SEBI also and promote the nationwide investor awareness programs as well. But this thing, direct regulator, no, it is not. And along with that, it was incorporated in 1995. That you must know. Chronological order, every order is important. When was the riskometer for mutual fund product labeling modified to include 6 risk levels? There were 6 risk levels. Fine. There are currently 6 risk levels, but from starting it was not like that. Okay. So when we have this particular model in 2020 only, prior to that we were not having 6 you can say risk parameters. Now we have low, low to moderate, 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 high, high and very high. Okay. So this riskometer is also important. Direct question was asked in last cycle as well, last examination cycle. Then we have Mr. Sharma invested 1 lakh rupees in short-term bond fund. After 9 months, the market value of his investment grew to 1,08,000. And when we talk about using the absolute return method, what is the absolute return on Mr. Sharma's investment? So directly, this is again a question which can be asked. There are various methods, and the ARR method is the most important one here. When you say that the investment is 1 lakh and the investment grew to 1,08,000, what is the right answer? When absolute return will be what? It will be obviously 8%. Simple. The market value minus the original investment divided by the original investment multiplied by 100, you will get the answer as this. Okay, 8% will be the right answer. What happens to the partly damaged goods or the wreck of property that is settled on a total loss basis? Total loss basis in an insurance claim. This is referred to as salvage, and after the claim is paid in full, the salvage will be what? Whether it will become the liability of the insurance company, whether it will be the, you can say, product which will remain with the insurance company, or it will be passed on to the customer. What will happen? Directly stated, it becomes the property of the insurance company. Fine. This is very, very important. Salvage, always remember, just the wreck of car, whatever are the remains, it becomes the property of insurance company. In the context of NPS, National Pension Scheme, which of the following statements accurately describe the key difference between Tier 1 and Tier 2 accounts? So NPS, Tier 1, 2, everybody knows. What is the actual difference? The difference will be option C. Tier 1, non-withdrawable retirement account, that is the retirement account with withdrawal restriction. Tier 2 is voluntary saving account with free withdrawal. So Tier 1 restricted, Tier 2 no restrictions as such. Fine. So C is the right answer. Here you can see Tier 1, Tier 2. The explanation has also been provided. Okay, so this was it for today's session. I hope that you have learned something new, and now you will be starting your last week of preparation with this benchmark, that yes, such kind of questions are asked in the actual exam, and we will be revising in that direction only. Fine. So if you are new to this channel, kindly subscribe to this channel, because in the remaining week we will be bringing n number of sessions for all of you, so that you can excel, you can make this particular attempt of JAIIB examination count in November 2025. Fine. If you have any kind of doubt, feel free to ask me in the comment section, and for expert guidance for the courses which we have, you can directly contact us on the number, that is 0981 981 9247. All the best for your exam.